Welcome everyone. I'm Wendy Thomas. I'm the Executive Director of Leadership Tulsa, and this is our Board Skill Up program with the Oklahoma Center for Nonprofits. And today's speaker is Liz Bowman. And Liz is the Director of Shared Services at the Oklahoma Center for Nonprofits, which means that she works with nonprofit finances every day. She provides shared services and support to a number of nonprofit organizations in our community. And I assume you're also deeply involved in the financial management aspects of the Oklahoma Center for Nonprofits. So big and small, she's seen it all. And her goal today is to help make sure that you as a board member understand what your roles and responsibilities are when it comes to nonprofit finance, and maybe share a little bit of information about how nonprofit finances are different than some of the other kinds of business finance that we encounter day by day. So Liz, I'm going to mute myself, turn it over to you, and I thank you so much for being here with us.
Great. Thank you, Wendy. Thank you all for being here. Like Wendy said, I'm the Director of Shared Services with the Center for Nonprofits. We do monthly accounting and finance work. We do consulting for organizations of every size. And one of our passions is educating boards. So many catastrophes can be avoided if you have an engaged board, and a board that's educated and knows how to look at some financials and what questions to ask. So this is really important information, and I'm going to go ahead and share my screen. Give me just a second to click all the buttons. Thank you, Wendy, for your wise advice. Okay. Let me get all my settings back to normal. All right. So this training is kind of in conjunction with the Washington Institute for Nonprofits. They were put together this training a few years ago, but it's still very relevant. And so there's going to be a series of videos that we're going to watch that really do a good job of explaining some of these reports and some of these things that we really all need to pay attention to in language that we can all understand, because we all know accounting and finance can be complicated. I do it every day, but I still know a fraction of what some of my folks that I work with know. So this is a really good training. Like I said, there's going to be some videos. Between the videos, we'll do some practice exercises, take questions, and then of course, feel free, if this training brings about questions or makes you think about something that you need to investigate, please feel free to follow up with me after the training. I'm happy to provide help in any way that I can. We have a great team and we'd love to help you with any questions. So we're gonna today talk about balance sheets, income statements, the Form 990, giving, and oversight. And there will be a video on each one of these topics and a little practice exercise. Like Wendy said, she's gonna send out a copy of this presentation as well as a kind of a workbook that goes along with this curriculum. And it's 37 pages, I believe. So it's got lots of valuable information. It'll have the practice exercises that we go through today, and just a lot for you to have in your toolkit when you leave here today. So I'm going to start the first video, and hopefully, Wendy, let me know if you guys have trouble.
Hi, I'm Andrew McMasters from Jet City Improv, and I'm here today to talk about fun, finance unlocked for nonprofits, brought to you by Washington Nonprofits. Now, our goal here today is to help you understand how finances help you to achieve your mission, no matter what your nonprofit does. If it's children, if it's arts, if it's literacy, education, it doesn't matter. Washington Nonprofits helps you with advocacy, education, and capacity building so you can achieve your mission. Now, as a board, may have a little bit of anxiety when it comes to numbers. Don't worry about it. That's what we're here to talk about today. Finance unlocked for nonprofits. Our goal is to demystify those numbers for you and help you understand how your finances help you to achieve your mission. Now, before we begin, here are 3 people who've discovered the importance of financial literacy for their nonprofit.
Nonprofits move forward a mission, and we're also in a business. Board of directors really need to understand the mission impact and also the financial impact of the organization. Integrating these two pieces will create excellence in your organization, accountability, and a deeply impactful mission for your community.
From a funder's perspective, we can't fund everyone that applies. So what we look for is a strong proposal with a good story, a good mission, and strong financials. And all of those things need to match in order for us to feel confident and trustworthy to fund that organization.
The consequences of board members not understanding what they're reading on a financial statement is that organizations can quickly get into trouble before people even know what's going on.
We're back, and I'm here with Erin Welch. Now, you are a CPA, right?
That's right. I'm a CPA that works exclusively with nonprofit organizations.
Okay, and you're going to help us to really demystify this information about nonprofits.
That's right, and the goal is to really engage board members. So you have 10, maybe 15 minutes on the agenda at the meeting for this topic. So really keeping those non-finance board members following along. After you watch this series, really knowing enough to be dangerous and spot some red flags and ask some good questions.
Sounds great. And we're going to be doing this through a series of 5 very short videos. The first one is B, which stands for balance sheet.
I for income statement.
N for 990.
G for giving.
And O for oversight. So if you haven't figured it out, it spells bingo! And we're going to be using this in order to help you understand more about your financial statements. And we will not be singing, right?
Absolutely no singing.
No dancing
No
either.
singing. No dancing.
No dancing.
All right, did you guys see all that okay?
It looked good.
Good, all right. I couldn't see you guys at all, so I had to make sure that we could all see that okay. All right, so as they said, we're gonna watch 5 videos. The first one about the balance sheet, which you will learn is also called the Statement of Financial Position for nonprofit organizations now. They're gonna talk about that one. So here we go with that.
Hi, I'm Andrew McMasters from Jet City Improv, and I'm here today to talk about fun, finance unlocked for nonprofits, brought to you by Washington Nonprofits. Now, our goal here today...
I think you stopped sharing your screen.
I did because I clicked on the wrong video.
Okay, very good.
Sorry. It's been a long Monday, everybody.
It has.
All right, here we go.
Hi, welcome to Finance Unlocked for Nonprofits video series. We're here to talk about balance sheets. So Erin, you're the CPA. What's going on here?
So the balance sheet is a basic financial statement that every board member should be getting. And to make this one even more confusing, it has 2 names. So it's called the balance sheet, but in the nonprofit sector, it's also called the Statement of Financial Position.
Okay, that's confusing.
Agreed.
Yeah.
Same exact piece of paper. So the balance sheet is a snapshot at a moment in time. What do we have?
Got it. So it's kind of like a selfie for your financial status.
Exactly.
Got it.
So there are rules to the organization of the balance sheet that make it pretty easy to compare between one organization and another. So at the top, always assets, what you own. And the organization of the assets is all about liquidity. And liquidity is really just a fancy word for how quickly you can access your assets.
So if I want to buy a sandwich right now, that money's right at the top.
That cash is going to float right up to the top. That's your most liquid thing. Cash and cash equivalents, if you see that on your balance sheet, that just means you can access it in 3 months.
Okay.
Other assets are going to be things people owe to you, receivables. Current assets are just things that you can get your hands on within a year. So again, it's all about that idea of how quickly we can get our hands on things.
Got it. So if I want to buy a sandwich later, that's stuff that's lower.
Right, down in more longer term assets.
Got it.
So the next chunk of the balance sheet is liabilities. So what you owe, and that's always at the bottom.
So if I owe someone a sandwich, that's going to be in the lower part.
Right. Things like accounts payable, things we owe to vendors, things called accrued liabilities, tends to be things we owe to our employees. But again, debt, all things we owe to others down there at the bottom.
Okay, so bottom line is, I get handed this balance sheet. What am I supposed to be looking for?
Perfect. Paying attention to current assets and the relationship between that and current liabilities. So in the next year, current assets is what we've got, current liabilities is what we're going to have to pay. So if that piece we have to pay starts getting close to the assets, we need to be asking questions and figuring out what our plan is.
Got it. Or if it has a little line that says, ask my accountant.
That would be a great board question.
Got it. Okay.
So reserves, that's another thing to think about and ask questions about at the board level. Do we have reserve targets? Do we have a policy? Are we meeting our reserves?
You mean savings?
Right.
Okay.
Right.
Got
Right. Is there anything that just looks weird? Is there anything that I didn't expect, something new, something that I've never seen before? Again, a great place to ask a question. Debt, is any debt that you all have meeting your expectations? If a line of credit or debt shows up and you didn't even know as a board member you had a line of credit or debt, again, let's ask that question at the board meeting. Do you have enough access to capital or cash to cover emergencies or programmatic opportunities? That's kind of something that you should really be thinking about all the time as a board member as you're reviewing the balance sheet.
Great. So bottom line, I get handed this, and this is going to be a statement that says whether or not I could buy a sandwich now, whether or not I could buy one in like 3 months or a year, and then who I owe a sandwich to, right?
Yeah.
Great.
You got it.
There we go.
Perfect.
Right. So since it is a balance sheet, I think we should take our selfie right now.
Perfect.
Are you ready? Okay.
I'm ready.
There we go.
All right, I'll spare you listening to the rest of their video. Okay, so I'm going to stop sharing really quickly. And before we get into the exercise, did anyone have any questions about that? Did that bring up anything that anyone wants to ask really quickly? All right. Okay, we're going to go through this practice. And as you can see, the answers are up there. So they'll be in your packet too, but we'll go through each one together and make sure that everyone understands how we got the answer.
So Liz, this time when you share, don't optimize for video, and I think we'll be able to see the numbers on the screen more clearly.
Got it. Okay. All right, how's that?
Much better.
Good.
And you might make it a little bit bigger if we don't need to look at both pages at once.
Absolutely, because you're right. And that way everybody can't see the answers.
Well, that's no fun.
I know. Oops. Okay, so the first question is, on what date was this snapshot taken? So as you can see at the top, this statement of financial position or balance sheet was created at the end of September 2017, and they're comparing it to the same period for 2016. So it was created September 30 of 2017. And what did this nonprofit own on that day? And as you can see, the answer, 2017 right here, their total assets, $377,420. That's their total assets on September 30th of 2017.
And it's a combination of a lot of different types of things, though. You've got cash and investments, but you also have some grants that are receivable. So I guess pledged, but not yet received.
Right. Exactly.
And they've got some land and some building and stuff.
Right. So they have liquid assets, then they have fixed assets that make up their total assets. So as you can see up here, the current assets is cash and cash equivalent, but the total of what they own is down here. So you can see kind of a big difference there, and that's why it's important to know what's liquid and what is not. All right, what did this organization owe as of September 30th, 2017? Does anyone want to take a guess without looking at the answer? Can everybody see it okay? I'm going to blow it up a little bit more. Okay.
I can answer. This is Kim. So
Hi, Kim. Go ahead.
Hi. They owed total liabilities of $75,933.
Thank you, Kim. Bingo, you got it. Perfect. Does everybody see that down here? All right.
And a lot of us in this last year had a new kind of O. Some of the PPP loans, payroll protection programs, ended up as liabilities on our balance sheet. Some of us nonprofits who haven't in the past taken a lot of debt had that as a new kind of debt.
Yeah, that's a good point, Wendy. At our Law and Finance conference last week, that was a big topic of conversation of PPP loans and how they were recorded and forgiven, and making sure that everyone's financials reflected that accurately. So that's a great point. Thank you. All right, so the next question is, are the current liabilities close to or greater than the current assets? You guys look at that for a minute and tell me if you can come up with that answer.
People could also use the chat thread if they don't want to.
Sure, absolutely.
Yeah, it might be easier.
You'll have to help me, Wendy, because
yeah, I just opened it up. It's hard when you're sharing your screen to get the chat.
Yeah, I can't see all the things. So, all right. So, anybody?
People are pretty sure. Clay says that the liabilities are greater. What's greater than liabilities, Clay? Actually.
So what did Clay say?
He just said greater than the liabilities. So,
sorry, the assets are greater than the liabilities. The current assets are greater than the current liabilities.
Correct. So current assets
are greater than the current liabilities, but they're less than the total liabilities.
Right.
Interesting.
So as you can see, there's multiple layers here and multiple things you should be looking at and asking questions about. All right, the next thing is, sorry, I can't see very good, is its current ratio. So current assets divided by current liabilities greater than 1. And as you can see up here on the first page, it gives you a little formula for figuring that out. So current ratio greater than 1.
Why don't you just give us the answer?
Yes, the ratio is 3. I know everyone's dying to do math after 5 o'clock on a Monday.
Yeah.
All right, and then how much cash does the organization have? How much cash? Cash and cash equivalents.
About $25,000.
You got it.
And their investments, they could probably get their hand on if they really needed it. But the receivables, you don't know when those would be due in.
Right, exactly. Good point. All right. So, and like I said, all this is in your packet that you'll receive, so you can take more time to go through this and make sure that you understand how we got to all these answers. So I'm going to go to the next video on income statement. Hopefully this will still go okay.
Welcome to Finance Unlocked for Nonprofits. In this part, we're talking about income statements. Erin, what's an income statement?
So an income statement is one of the basic financial statements that all board members should be getting. To make this one confusing, it has multiple names. It's called the income statement, it's called the statement of activities, it can be called profit and loss, it can also be called the P&L. So same exact report, same piece of paper.
That's confusing.
I agree. While the balance sheet's a snapshot, the income statement is about a period of time. So activity over a month, a part of a year, or a full year.
So it's like the rings of a tree rather than just a picture.
Right. The balance sheet has some specific rules, and the income statement has a lot of flexibility with how it can be organized, which is great so that we can really use it the way that's best for our organization. So if you have an income
Liz, can you pause that for a second?
Yeah.
So when you went right to it, we didn't optimize the sound and people are having a hard time hearing it.
Okay,
So
all right. Sorry.
So stop share and then go back in hitting those. Apparently you have to go back and forth between those two modes.
So sorry. Okay, let me rewind.
Profit. Welcome to Finance Unlocked for Nonprofits. In this part, we're talking about income statements. Erin, what's an income statement?
So an income statement is one of the basic financial statements that all board members should be getting. To make this one confusing, it has multiple names.
Ooh.
It's called the income statement, it's called the statement of activities, it can be called the profit and loss, it can also be called the P&L. So same exact report, same piece of paper.
That's confusing.
I agree. While the balance sheet's a snapshot, the income statement is about a period of time. So activity over a month, a part of a year, or a full year.
So it's like the rings of a tree rather than just a picture.
Right. The balance sheet has some specific rules, and the income statement has a lot of flexibility with how it can be organized, which is great so that we can really use it the way that's best for our organization. So if you have an income statement, there's an example in the kit. The only real rules are what's coming into your organization, so support, which is contributory in nature, revenue, things that are earned, so things that coming in are at the top, things that are going out, expenses, those are at the bottom. Really, those are the only real rules for how things are organized on the income statement.
So at the top is what everyone gave us for support. The next one is what we earned, and then the last part is what we spent.
Right. So, and again, this example in the kit is a really good example of what most board members should be seeing every month. One of the columns is all about budget. So every organization every year should be reviewing and approving a budget. And this is really just the plan. So this involves being both fiscally responsible, but also setting your mission priorities for the year.
This is kind of the idea of this is what we say we're going to do.
Right.
Okay.
Right. And then another column, which is almost always called actual, is what is really happened. So far this year, for this month, what has happened in actuality.
So we have the plan, and then we have reality.
Right. And then the third column, hopefully, is called variance. So this is really the difference. So what we planned, here's what actually happened, and here's the difference.
Okay. So I get handed this document. What should I be looking for?
So something I think is really important and really, frankly, easy for board members to do is to compare the story of what they're hearing about their organization to what they're seeing in the income statement. So as a board member, the executive director is giving you a report each month. Development is talking about this great campaign or this event that did so well. So it's taking that information, and when that's not jiving up with what you're seeing in the financials, asking questions.
If I look at it and it says that we planned for it to make 100,000 and it made 2,000, that's bad.
It's something you should understand. So I think understanding what happened and why it's different from the conversations that have been having in the boardroom.
Especially if they told us it was going to be really cool.
Exactly right.
Okay.
Yeah. So another thing to pay attention to is this variance column. So when things aren't going according to plan, either we're doing really much better or much worse, again, asking questions. So figuring out what variance is meaningful to us as an organization. It could be 5,000, it could be 50,000. Understanding why we're off from plan, and figuring out if there's some board work or some action to be taken on that.
What if one thing is really off in the plan low and the other one's really off in the plan high?
Well, in theory, that's good because they sort of offset each other.
Okay.
But I think it's still really important to understand each one individually, why that's happening, and to see if we need to do something different to be where we need to be at the end of the year.
Okay.
So another thing to think about is if we're really dependent on one source of funding. So I think if 75% of everything we get is from one person or one foundation, it's really important for board members to understand that, because if that stops coming in, that really makes a big difference to us.
Yeah.
And that we can then plan for a potentially unexpected drop in revenue.
So we need to have some other things in case that goes away.
Right, right.
Okay. So bottom line here is I get handed this document, right? I'm looking at it, and I can see that up at the top it has all of the things that we got from other people, and then the things that we earned, and then down below are all the things we spent, correct?
Right.
Okay.
Yeah.
What else do I need to know?
So I think it's important that the board is getting the right reports, so the right income statement, an income statement that's at the right level of detail for your organization. It can't be too crazy long, pages, a scroll, all this nitty-gritty detail. Otherwise, board members can't focus, and people are paying attention to these little things. So bringing it up to the right level for the board to make good decisions on and ask good questions. If I got to choose, it would fit on one page. I also don't think that board members should be doing math. I think this variance calculation should already be done for them. If there are ratios or things that need calculated, that should already be on this piece of paper.
So, because math is hard.
Math is hard, and board members are not going to do it.
True.
So if we want people to be asking questions about something, it needs to already be done for us. And I think thinking about if you want to include words or variance explanations kind of as a cover sheet or accompanying this for the folks that aren't, so inclined to understand the numbers, that helps those people kind of follow along with what's going on.
Okay, so for an income statement then, rather than doing about a 4-hour movie that's epic, we're talking about taking it and we're condensing it down into a fast training montage or a trailer.
Right.
Okay.
So that you can really pick out of it what you need and ask the questions.
Perfect.
All right. Was that better? Everybody could hear it better? Okay, good.
Yeah, that makes a difference.
All right, we're gonna just go through, I'm gonna share again, and we'll go through the next.
So Linda has a quick question about the statement of activities, and
Sure.
She asks, I just lost mine. Anyway, she says, is it common to compare 2 years rather than showing current versus budget? And actually, I know from my organization, we do sometimes do that, show how we're doing compared to last year as opposed to according to a budget. There are several built-in reports in QuickBooks and some of the other software. So I think I've definitely seen nonprofits choose some different versions of that. Have you seen that too, Liz?
Yes, absolutely. Yeah, and it just depends on the board and the organization. We have customized financial reports for each of our clients based on how they want to see it. Some people want to compare month over month. Some people want to do the whole year. We also provide a budget versus actual report that's a little bit more detailed than this. So yeah, that's a great question. Yeah, you can organize this in the ways that make sense for your organization. So really quickly looking at this statement of activities, they ask us, what is the period that's being compared? So we're assuming a January 1 calendar year. And so this is the period January through September 2017, and they're comparing it to their annual budget here. And like they said in the video, doing that variance calculation is important. So if you're on a board and you're not seeing that, just ask for it. Another thing that we recommend is a variance report. And that way, instead of feeling like you have to change your budget, especially if there's a big variance, you can just add an additional report that can just be a simple Word document or notes in an Excel file that says why that variance is happening. For instance, I turned in our billable hours today for April, and we didn't hit our budget, but we had a really good reason for not. And so I even gave that to our accountant. I said, for your variance report, here's why. Because we want to make sure the board understands if we're not hitting our numbers, why that is. All right, and let's see, how is this year doing relative to budget? Does anybody want to take a guess on that?
Well, when I look at it, since it's only, it's a year-to-date budget as well as a year-to-date actual. Because one thing I've noticed on some of these is if you have year-to-date actual and it's 3/4 of your year, but you're comparing it against a full year budget,
right,
you're doing pretty good. But they're running behind for this year-to-date if you have that year-to-date budget.
Yeah, and so yeah, down here you can see they have a deficit of $17,135. But that could be for many reasons. So that's why we just ask questions, right?
Yeah, something I've noticed in nonprofits that really happen is sometimes the income comes in big chunks, like you do a membership appeal or you get a big grant or you have your big event. And so it comes in big gulps, and then
Right.
it goes out and kind of dribbles that keep, more steady as far as going out. Although you could also have an extraordinary expense month.
Sure.
If you have some sort of big bill you typically pay in 1 month.
Great points, Wendy. Thank you. Their next question is, are there large variances? So we can see that yes, there are some large variances for what they budgeted and what they actually got. Let's see. There's variance in support. They budgeted to get $50,000 from the fund foundation and only received $15,000. So that may have been out of their control. And again, that's just a note that you put in your variance report. Is the income statement formatted and at the right level of detail to give us the information that we need? And this question is kind of any answer is good, because we just discussed that this report can be customized to give your board the level of detail that you want for your organization.
What you don't want to do as a board member is like clue into like, there's a $29 difference in this miscellaneous item. Can you explain that to me? That will drive your executive director nuts, because it's not material is the term that I learned. It's just a very small variance. So you definitely want to focus in on those that make the bigger difference.
You're absolutely right. I was talking to one of the team members on my team the other day, and she said, she was trying to do something and she was 3 pennies off. And I said, just tell me you didn't spend any more than 3 seconds trying to figure out why you're 3 pennies off, because you've already wasted money if you're trying to, nitpick those little bitty things. So that's a good point, Wendy. All right. Would this income statement be shared with funders? Would it provide the right level of information for their needs?
My opinion is it's too much for a funder.
It could be. You're right. It could be. I think they're saying, yes, this is a good level of detail as far as it's enough. It may be a little bit too much, but we definitely don't want to give them any more than this.
Right.
And again, it depends on the organization and the story you're trying to tell with this report.
And what they ask for, because sometimes they will ask for a year to date.
Oh, yeah.
In case I would definitely give them, exactly what I give my board.
Absolutely.
I guess it'd be different between like a program budget you submit versus financial backup they ask for.
Right. Exactly. Precisely. And so the last question is, how diversified are the funding streams? Is the budget overly dependent on a single revenue stream? So let's go back up here to revenue. And we can see that they're fairly diversified. They have income coming in from several different sources, and that's great. If like they said, if you're getting 75% of your income from one source, that could be a problem, because what happens if that one source goes away? We've seen that happen with one of our clients that had a $500,000 grant that they got every year, counted on it, put it in their budget for years, and then all of a sudden they didn't get it. And they had not bothered to diversify very much because they were just counting on it every year. But it came from the federal government. So you can, imagine that they just, sometimes things happen and you just don't get it. So
is there a 10%, 25%? Is there a rule of thumb, or is it different for every organization?
It's different. It really is. That's the answer in accounting and bookkeeping. For nonprofits, it really just depends. Yeah. All right, I'm going to stop sharing this and then reshare the next video. All right, here we go. This is about the IRS Form 990.
Hi, welcome to Finance Unlocked for Nonprofits. In this section, we're going to talk about 990s. So Erin, what's a 990?
So the 990 is the tax return that, with very few exceptions, every nonprofit organization is required to complete every year. The IRS has given you this gift of your tax exempt status, and what they require in return is that you complete a 990. The Form 990 can be different depending on how big you are. A smaller organization could have a postcard or an EZ form, and a bigger organization will have a much longer form to complete. But everyone needs to submit one.
Okay, and this is just the staff, they just fill this thing out and then send it in, right?
Well, it can be more complicated than that, and
Okay.
perhaps having a CPA complete it. And the board has a role in this too, and we'll definitely talk about that later. So I think it's important for the board to know, are we filing our 990 and are we filing it on time? Because there can really be some serious penalties involved as well.
Because if we don't file it online, the IRS gets mad.
The IRS does get mad.
Uh-oh.
And worst case, you know, there are thousands of nonprofits that lose their tax exempt status every year just because they didn't file their 990. So that's something we would like to avoid.
That is bad.
That is bad.
All right.
Yes.
So you fill it out, you send it to the IRS, and then it becomes this public document?
That's right. So the Form 990 is your most public financial document. You're required to give it to anyone who asks for it, and it is loaded up onto guidestar.org for anyone and everyone to see. So if I was thinking about giving a significant gift to a nonprofit organization, I would look you up on GuideStar and really see what your 990 and what your GuideStar profile said about you.
Got it. So my GuideStar profile, that's going to be like the Facebook page for your organization, right?
Yeah.
Okay,
Yeah.
all right.
Yeah.
I wanted to make sure.
So the other piece is, since this is so public, to really use your 990 as a marketing tool. So there's a lot of open space for words in the 990, contrary to what you might think about a tax return, all about numbers. There's a lot of space to talk about your programs, your mission. So really taking advantage of that, again, for these funders and prospective funders who are going to be out there looking at your 990. So it can include things like number of people that we've served, volunteer time, just all that kind of good programmatic stats. And frankly, it shouldn't come from accounting. So the pieces that are the words, stuff from our website, grant applications, you know, how we're talking about ourselves in our annual report, that kind of information should really be on the 990.
So this is all of the stuff. Like, this is like a Facebook page with no privacy settings.
That's right.
Right? It's all out there.
100% public.
Okay.
Yeah.
Wow.
Yeah. And another thing that's in the 990 is a checklist for policies and sort of governance best practices. So for the board, you know, to look through that and see what kinds of things have we said we are doing and what kinds of things have we said that we're not doing. And the kinds of things that are on that checklist, a conflict of interest policy, whistleblower policy, a couple of things about how we compensate our executive director, and does the board review the 990 before it gets submitted? So again, this importance of the board reviewing the 990.
As a board member, if I look at the 990 and I go, oh, we don't have these things, how bad is that?
It's not bad. So the IRS has said that checking no on some of those governance questions doesn't mean they're going to come knocking and audit you. But I think for those that you're checking no to, having some really good conversation about, you know, these are areas for improvement. Are these things we want to implement in the next few years, or are we okay with having these boxes be no for whatever reason?
Okay, so they can sort of guide us to what we want in the future.
Right.
Okay,
Right.
I understand it.
Yeah. And in your kit for the 990, as far as board review goes, I mean, this can be a really daunting thing that's coming to the board table once a year. So in the kit, there is a section where it focuses you on the 4 pages that are really the most crucial for board members to pay attention to. And there's a 1-page 990 checklist that can really help with the review as well.
So it's kind of the speed read for the 990, correct?
Exactly right.
All right. So most importantly, the 990 is going to be the most public document. It's the Facebook page for this organization. It is completely public. There's no privacy settings. And I think as a board member, it's important for us to know that the 990 is your friend.
Agreed.
All right. Be friends with your 990.
All right. We're going to skip the practice on this one because we could spend quite a bit of time going over it. You do have the sample of the 990 in the materials that Wendy will send you, and you can go through that practice yourself. I encourage you to do that. Did anyone have any questions about the 990?
Laura has one good question. What about common red flags that people should look for? One thing I noticed, they said you can't be late with it. You can file an extension. And oftentimes when you're working with local CPAs and auditors that are helping you fill it out, they might file an extension, either number one, to give you time to assemble the documents you need, or two, to get you into their less busy season so they can charge you less. As nonprofits, we often do that. So I know that was one thing they said was a red flag, but it's not uncommon to apply for at least one, even two extensions.
Yeah, we definitely recommend filing for that extension. There's absolutely no penalty for doing it, and it does give you more time. You know, as you all know, nonprofit organizations are focused on their mission. They're not focused on gathering accounting documents. So don't at all hesitate about filing that extension. Just get it in, just get it done. The important thing is that the board should absolutely see the 990. Our board approves our 990 before it's filed. It's really, really important for a board to see that 990.
So any other red flags, or do board members help to prepare the 990? In my organization, only the treasurer is super involved in reviewing the auditor's work, and we do hire a CPA to fill it out, but the treasurer is probably more involved than the other board members.
Yes, the treasurer, or if you have a finance committee, our finance committee is way more involved in helping our accountants, our VP of finance, make sure that he gets, you know, everything that he needs. And we do have a CPA that prepares ours. We definitely recommend that. Shared Services does not prepare 990s. We always recommend our clients hire a CPA to do that for them. And a lot of times it is the auditor, which is totally fine. Yeah, does that answer the question?
Yeah, I think that answers that question. And then red flags, anything that would put you on somebody's radar screen?
I mean, not filing one, really. You know, and then you'll see there's one of the practice questions that there's a list of questions that it asks. And like in the video, they ask about policies that you have and things like that. And they said, you know, the IRS isn't going to come audit you just because you say no to every single one of those. But a red flag would be if you don't have any policies at all, because then they would wonder how you can be confident in your numbers, in your financial reports. So definitely we recommend having those policies in place. That's your rule book, your guidebook, your why or why not for doing, you know, anything related to finance. And I think in your packet, you'll find a lot more information about that regarding the 990.
I have a question, Liz. Actually, and this is back to the income statement. And sorry, I lost my voice, so
it's okay.
I'm struggling through this. Okay. Because it's a nonprofit, should they be operating at break even? Should they be trying to make profit? Should they be at a loss? Can you talk a little bit about that?
Sure, absolutely. We definitely recommend, you know, like they said, if the liabilities start nearing the assets, then you need to start asking questions. Because ideally, a nonprofit organization would have 2 to 3 months of reserves. Now, we know that is not always going to happen for all nonprofits. It's a luxury for some nonprofits, but that's really the recommendation, that you have 2 to 3 months of reserves so that you can pay your rent and your payroll and your benefits and those key things in the event that something happens. So that, you know, that's a really good question. And it's different. You know, we see some nonprofits that operate at a bit of a deficit all the time. It just depends on the nature of the work. And you know, like I said earlier, that's an answer that we get a lot in nonprofit finances. It just depends on the organization. But the key thing is to know the programs, know what they're doing, and know what those numbers should look like. So when you're looking at those financial statements, you can see changes and trends. You know, if you start seeing those liabilities really outweigh those assets, you need to, you know, ask some questions about why that is.
I'd also like to raise the point that some people think it's illegal for a nonprofit to make a profit. And honestly, it's what you do with the profit. Exactly. And when you get a profit, you put it back into programs, into reserves for a future rainy day. You can remunerate your staff. You can give them bonuses as long as they're kind of within sort of market conditions. Yep. You can, what you can't do is give it all to the board of directors and say, hey, you all had a great year. Here's some for everyone.
Exactly. Yeah.
But you can't operate very many years in a row. If you have deficits every single year, you'll go out of business, because a nonprofit is a business.
Yeah, and we know, we have to do enough fundraising. So trying to fundraise your way out of a deficit is difficult, and you don't want to do it. But, like I said, we realize sometimes, our board approved a budget with a deficit for 2020 because of COVID. So in that instance, that made sense. So that's a really good question.
Thank you.
Yeah, good. Did we get all the questions in the chat answered?
Dylan asks if there's an example of too much reserves. And I know that George Kaiser Family Foundation, when you submit a grant, they ask, do you have between 3 months and 9 months of reserves? And then if you have less or more, they just ask for an explanation. It doesn't mean it's impossible, but that is a tricky question, because a lot of us do want to have a healthy reserve.
Yeah, that's a great question. And I think, like Wendy said earlier, too much would be, you have this much, but why? Maybe it's part of a capital campaign. Maybe you know that you're going to have to replace your air conditioner and upgrade some kind of other equipment at your facility. So you need a good chunk in reserves to cover that. There could be many reasons that you would have a larger amount than may seem normal. But like we said, just explaining it, knowing why that is the case is the most important thing, because people will ask, like she said, especially funders. So just having that why to give them is what you want.
And then there's a question about endowments. So the difference between a reserve and endowment.
Yeah, an endowment, you can, of course, that money's there in perpetuity, but you can only spend what you earn off of interest. And so you really shouldn't count on an endowment as a reserve, only if you feel really confident about the amount of interest that you can draw down from that each year. Does that help answer that?
Yeah, I think it's permanently restricted money that you just live off what it, some sort of a interest or what it throws off in some way.
Yes.
So
yes. And
it's protected.
Yeah, we had some great questions about endowments in our Law and Finance conference last week. So I think a lot of people were kind of looking at those during COVID going, gosh, can we borrow from those? Can we, and you just really can't. So yeah, you should just look at those as the interest is your income every year from that, and that's it.
Well, checking the time, let's go to our next video.
All right, here we go. Sorry, let me get back over there. All right.
Welcome to Finance Unlocked for Nonprofits. This segment, we're going to talk about giving. So Erin, what's the deal with giving?
So giving and contributions are really specific to the nonprofit sector. So even if you have finance experts on your board, people who are business savvy, there are still things about the way we get gifts and contributions that are confusing and that don't exist in the for-profit arena. So they really hang up all board members. So those are some of the things we're going to talk through today.
Okay, I think I understand giving. So what we're talking about is that people or organizations, institutions give you resources in order for you to complete your mission. They don't get anything in return.
That's right.
They just give it to you.
Right.
Okay.
Yeah. And there's not this idea of necessarily having to earn revenue when we're talking about contributions and gifts, which is different from the for-profit sector.
So what are the three kind of weird ones we're going to talk about?
So the first one we're going to talk about is pledges. So when you're looking at financial reports, this can also be called promises to give, just to make it more confusing, but it's the same exact concept. So a donor is promising or pledging to make you a gift in the future.
Okay, so someone says, I'm going to come to your party and I'm going to bring you a present.
That's right.
That's a pledge.
That's right. And so this can be a verbal pledge, it can be a pledge form, it can be a single gift in the future, it could be a multi-year gift over the next 5 or 10 years. It can take on a lot of different forms.
Oh, so if someone says, I'm coming to your party, but I'm going to give you a gift for many years in the future.
That's right.
That's a pledge.
Yeah, that is a pledge. And the piece that's confusing is it's not about the cash. It's not about me handing you my gift. You record it when that pledge is made, and that's what makes it more complicated.
So when they say they're going to give it to me, that's when I record it.
That's right.
Okay.
That's right.
Good. What else?
So as a board member, it's important for you to know, does your organization ask for pledges? So do we have pledges? How do they show up in our financial statements? And if we do have pledges, how do I tell the ones that are due next year from the ones that are due further out in the future?
Okay, good. What's the second one?
In kind. So this is us getting stuff, so goods and services donated to us.
Okay, so this is someone's coming to my party and they're going to bring the cake, which I normally would have to buy, but now I don't have to buy it because they're bringing it. That's
exactly.
in kind?
Yep, that's in kind.
Okay.
And so common examples: computer equipment, software, professional services, sometimes free rent, supplies. All of those are examples of in-kind contributions.
Great.
And so one thing I will point out is volunteer time, crucial to our organizations. We track it, we use it for funding applications, tell grantors about all of our volunteer hours, but you won't see volunteer time recorded in the financial statements. So that can be confusing to people. So just wanting to point that out.
Great. What's our third kind?
Restrictions. So the board can't restrict things. Only donors can restrict gifts. And so there are 3 types of restrictions. So the most restrictive, permanently restricted. So the typical example, endowment gift. Someone's giving us a gift, we can never ever touch it, we can only use the earnings for something specific later on.
Okay, so grandma gives us money and it has to stay in the bank account, but we can use the interest to buy a burger if we want to.
Perfect.
Okay.
Yes. The next kind, temporarily restricted. So this is more narrowly focused than your general mission. So for a specific project or a specific program, capital campaign, that kind of thing.
Okay, so this is grandma gives you money, but you can only spend it on college because that's what she wants you to spend it on.
Exactly right.
Okay.
And now you have to do all the extra work and tracking to make sure that you're only spending it on college and nothing else.
Got it.
And then the third, the least restricted, unrestricted, really as long as you're doing the work that you're doing as part of your mission, you can spend it on whatever you like.
So this is grandma gives you money and you can buy a car.
Right.
Okay.
Yeah.
I like that one.
So as a board member, it's important to know what kind of restricted gifts you're asking for, how they're being tracked, and that you guys are doing what you need to do to steward the donor's gift appropriately.
Okay, so we've got these 3 kinds. Let's say I'm going to have a party and somebody says, I pledge to bring you a gift. That's the pledge.
Right.
Also, someone says, I'm going to bring the cake. That way you don't have to buy one. That's in kind. And then the last one is you can only use this money for your college, so that's restricted.
That's right.
Okay,
Yeah.
I get it.
So those are the more complicated kinds of giving. So another piece that's really important is this idea of communication. So it's really important that the people asking for the gifts, board members, volunteers, development staff, is having a lot of upfront communication with the people who are accounting for the gifts and tracking them in the end, so that everyone's on the same page about, do we have a pledge? Is this gift restricted? Do we have in kind? How are we tracking all of this stuff? Because all of these are great gifts, but they're more work. There's more accounting work to go on with each of these. So just making sure that, again, we're all really clear up front about what's going on.
Now, what happens if somebody comes to your party and brings you a gift you don't want, like that weird uncle brings you like mustache wax or something, right?
So I think you're stuck with your mustache wax.
Okay.
But in the future, you could have a gift acceptance policy. So that's something that really clearly lays out what kind of gifts we're interested in receiving, what we accept, and the types of gifts that we're not interested in receiving.
So it's a gift registry.
Really? Yeah.
Okay,
Yeah.
I got it, good. So I think we got the idea here and the kind of 3 anomalies on this. And the most important thing is we all love gifts.
We love gifts.
We do love gifts.
Uh-huh.
The Leadership Tulsa just went through a growth campaign, which really suddenly we had some multi-year pledges and some of those other things. And their advice about figuring out your accounting before you start a campaign like that is really good advice. We could have done better, but we caught up.
Good, definitely. Well, I know we're 6:26, so we can skip the next video. It is hyperlinked in the PDF version of this that you're going to get. So I encourage you to watch that other video. All those practice questions and everything are in your packet. So you'll have all of that. And again, please feel free to reach out to me if anybody wants to talk about any of this or anything finance related. We can schedule a call, shoot me an email, whatever works for you. And then with our last few minutes, I'll take whatever questions you all have.
Great. So last call for questions. Either unmute yourself or put it in the chat. We have, do board members ever vote on investments or employee benefit plans? Good question.
That's a great question. Absolutely. Yes. If you're like our board, you vote on everything that we do. We bring everything to the board. So yes, you can ask to be involved in that and help, go through that process and vote on those things for sure.
So at Leadership Tulsa, for instance, the board approved an investment policy, but then our finance committee kind of does the year-to-year managing of that and would only bring that back to the whole board if there was a change in the policy.
Yep, that sounds about right. What other last minute questions do we have?
Well, I'm not seeing any others, but I will be sending out the follow-up materials along with the information on how to contact you. People know how to contact me as well. And I just put in the chat thread one more time that link to the follow-up survey. This is particularly important for those of you who are getting your required training for your board internship assignments. Liz, thank you so much for spending your evening, a Monday evening, making finance fun. I love the video series. That's a great find. And we will see everyone next month in the first Monday of June. And remember, if you're doing the board internship, June 4th is the deadline to get 1 board basics and 2 of these board skill ups.
Thank you, everyone.
Good night.